That was one crazy week within the markets.
Ow! Yes! That's awesome!
What's happening, momentum traders, and welcome to another weekly market update. For those of you that have no idea what I'm talking about, basically we had the minutes being released of the last FOMC meeting, and Mr. Jerome Powell, Mr. Federal Reserve himself, had a couple of interesting things to say, which the market reacted quite a lot to.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We're going to look at that on the charts. We're going to explain a little bit about what was discussed, what was revealed, what was hinted at, and talk a little bit about the amazing trade that we caught on GBP USD. So let's jump into the charts and have a look. All right, so I'm going to start off with the dollar index chart, starting on the macro big picture time frame, drilling down a little lower and a little lower to sort of draw a bit of a picture and a scenario cast of what potentially could be unfolding here. So kicking it off with the dollar index chart, as I've said, the yearly chart, 12 months over there. What are we seeing? Where's the dollar at? And what is our forecast or our scenario cast for what could potentially unfold here? Well, the dollar actually had quite a big rally in the first quarter of the year, pushed up quite nicely. Then the second quarter started off quite bearish. We had a massive sell-off, and the news has been pretty bearish for the dollar. They continuously keep on printing more dollars. They continuously keep on purchasing more bonds at the Treasury. They're keeping interest rates low. However, inflation is starting to catch up, and there's quite a lot of fears at the moment within the market around what's going to happen with inflation. Now, I don't pay too much attention to the fundamentals. I'm more of a technical guy, but I like to keep up to speed with what's happening in the news, because whether you like it or not, whatever the Federal Reserve does or says is going to have an impact on price. So looking at the various different lines here on this chart, there are quite a few, but I probably want to draw attention to maybe only one or two of them in particular. And it's currently where price is right now. This level over here is a particular yearly high level that we've discussed multiple times within our trading community. And we've spoken about the significance of this yearly level. You can see here when this price sparked up, it got rejected in 2005. We then had the big sell-off thereafter. Price dropped off quite a lot. And we then had the big push up towards 2014 and then 2015. Eventually, we broke and held above that level, right? Now, since that break up above that level, price has tested the high of 2004 multiple times. Basic technical analysis in terms of support and resistance is that support flips to resistance and vice versa when price is broken through that level. We can see over here that this provided resistance once, twice, then we had the sell-off, and then eventually we broke through and held after 2015. Price then came back down. 2016 found support, 2017 found support, 2018 found support. We then had somewhat of a indecisive year for the dollar in 2019. And then we had COVID hit the world, take over the world. And that's pretty much been the key focus, where Federal Reserve jumped in and started to do what they do best. Now, 2020 was the first year that we've not only had a test below that 2004 high level, but price actually physically closed below it. And that's a really important thing to note, because for the previous years, being 16, 17, 18, and 19, price has tested this level multiple times, but couldn't close below it. where 2020 was the first year that price managed to close below it. Now, to see where the price stays below it and holds below it, we need to see. We need to obviously see there's still half a year that needs to play out. But as I said at the beginning of this video, 2021, Q1, we saw the dollar strengthen. Then Q2 sold off quite aggressively, and it's been selling off for bulk of Q2. And this is the first signs of seeing dollar strength come back. Now, this could just simply be a pullback in price to the previous support, which has now become resistance. So price broke through and closed below at the end of 2020. And let's maybe just drop down to a quarterly time frame and have a look here in terms of exactly what I'm saying. So here was Q4 2020. We closed below that yearly level. As I said, Q1, we had a nice big push up in price. Dollar strength came through at the beginning of the year, which in my books looked like just a simple pullback in price. After 3 solid quarters of selling off for the dollar, it's no surprise that you're going to have a little bit of a relief rally that takes place. And that's exactly what happened in Q1. What we then had take place thereafter was that Q2 sold off quite a lot. We had an aggressive sell-off for bulk of April and May. And now at the start of June or the middle of June, we've had some news developments. The Federal Reserve this week, Wednesday, hinted towards inflation and interest rates potentially starting to rise earlier than what they had initially forecasted. They haven't set it in stone. They haven't said that they are definitely going to do it at this point in time, but they've started to hint that inflation is picking up a lot quicker and that potentially they might decrease their bond buying a little sooner, and things are looking a little bit more rosy within the US economy than what was initially expected. The recovery has taken place a lot quicker than what they expected, and this can be a good thing and a bad thing, and I'm going to explain exactly why within a moment. So why do I say this can be a good thing or a bad thing? Well, the last time the Federal Reserve tried to steadily increase interest rates was around 2018, 2019, and if you go look at a chart of the S&P 500 during this time, the market reacted unfavorably towards that news. Low interest rates means cheap money, and with all that cheap money and lots of money afloat at the moment on the Federal Reserve balance sheet, I honestly think that's what's been keeping the market afloat. It's literally just a little bit of toothpicks holding up an elephant strategy at the moment, and it's not going to hold for too long. I think as soon as they start increasing those interest rates and they start trying to control inflation and trying to, I suppose, reel it in a little bit, all the sort of quantitative easing that they've been doing within the markets, low interest rates, printing dollars, devaluing the dollar, they're going to have to start reeling that back in. And when that happens, it's going to be really interesting to see how the market reacts to that. Now, I think we already had a little bit of a taste of what could potentially happen when they start to do that. Just the hint towards those kinds of discussions. It's not even saying that they're going to be doing it at this exact point in time. It was just a discussion of a discussion, as Mr. Jerome Powell put it. And look at what the market did. The dollar absolutely skyrocketed. The rest of the market shat the bed, to put it quite mildly. And the dollar strengthened, and whether it holds up or not is yet to be seen. I've got no crystal ball. I can't say exactly this is what's going to happen. But ultimately, it's just interesting to put the puzzle pieces together and see how the markets are reacting. Everybody's been sort of very bearish of the dollar, myself included. But we took a setup on dollar strength this week based on just the system and the strategy that we trade, and it paid off quite nicely. The key thing that I want to talk about here on the dollar index chart is this yearly level, because I really do think that that's going to be make or break. This is really what is holding price up for the previous years. This was a key support level. As you can see, when I drop down to the quarterly time frame here, this has really been the floor for the dollar index for a number of years. Here, over 2018, we dipped below it at the beginning of the year, but we pushed up quite strongly in the second quarter of 2018, and the dollar continued to strengthen. The difference between this dip over here and this dip over here is that this happened at the beginning of the year and the yearly candle closed back above the support level. However, in 2020, we closed and held the year below that support level, which is quite a significant shift in sentiment and price and market structure. We had the push up in Q1. We had the big sell-off. If I maybe now drop down to the monthly time frame, you'll see exactly what I'm talking about. January, February, March, nice big push up in dollar strength. Came up to this level over here. That was the quarterly high for Q1. And then April and May have been solid sell-offs for the dollar. You can see that the month of June has been pretty strong recovery. And a lot of that was done with this news that came out this week. So we're going to have to wait and see whether the market can hold that level. This could just be, once again, another retest of resistance, which was previously support. We maybe can come out here, take out a few stops. The market might just be searching for a bit of liquidity, taking any early short sellers out of the market for the dollar index, and then continue the move down. As I've said, this level over here is pretty key for me, being a really key support and resistance level. So I'd be interested to see what the dollar index does around this level. And I'm almost pretty confident that we're going to start stalling over here. Prices moved quite aggressively within this month already. And within this week, we're at a key resistance level. And I do think that price is going to start stalling around that level. We might pop out for a little bit of a short period of time. But I do think that price is definitely going to start chopping and churning around this level. What could potentially then happen in terms of a bearish dollar scenario is the low of 2020 is another key level that I'm keeping a close eye on. If we can close and hold below this 2020 level, that for me is going to be the signal that we're going to be heading for these targets over here. Around 84.75 would be my macro target number one for the dollar, and around 81.48 would be my second target. Why have I drawn those in? Well, this is sort of, the most obvious resistance level previously before we had this big rally. So, if we do get below these lows here, this consolidation over there, if we do get a little bit of a spark up, take out some of the early shorts, reverse back down, potentially the dollar could continue bearish, for, balance of the year, if not a few other years hereafter. And if we can get below these lows as well as these lows over here, this would be my macro target number one. And if we can break and hold below this, region here of resistance, the next stop I think would be around the 81.48 level. But there's no point in talking about these target levels when we're still stuck within this range over here. So just dropping it down to a weekly time frame, having a look at what we have on the dollar index chart over here. This was the big sell-off in 2020. Then we had the big push-up start of this year. And you can there see the weekly candles for Q2 selling off, coming right back into that support level, which was pretty much the lows of 2020. You can see that at the beginning of the year, we took out the low of 2020 where the year closed off. Then we pushed up higher. We've come right back into that support level again. Couldn't break below it. The news came out this week and a big spark up for the dollar this week, up 2% for the week on the dollar index. We're right smack bang into that support level again. It's no surprise that price has stopped at that level. If we just zoom out for a moment, this is clearly a very strong support and resistance level that I've highlighted over and over. The bullish scenario for the dollar index, because we've always got to be open to the fact that price can go either way. We can't just be sort of married to one bias and continuously keep on trying to short the dollar if dollar strength picks up. That would just be naive and stupid, to be honest. But the bullish dollar scenario is going to be a close and hold above this level. Similar to looking for a break and hold below these lows would be my target here. That is a lot further away than currently where we are right now. I'm really going to be paying attention to what the dollar index does towards these highs over here and above this big support resistance level over here. And that is why I'm saying that price has come into a really solid level of resistance right now. And next week and the following weeks and pretty much the end of Q2 is going to be interesting to see how the second quarter of this year closes off. Is it above or below this level? And that might give us a little bit of an indication of what might unfold in the third and fourth quarter of this year. But right now, we smack bang into a strong resistance level. And now it's a wait and see opportunity. Do we just spike up, take out some early shorts and continue down? Or do we break above and hold? We will have to wait and see. Not only was the dollar index affected by the news this week, Wednesday, but look at what happened to the S&P 500. As well as the German DAX, not as much as the dollar index. DAX came down 1.8%. Doesn't look as nasty as the S&P 500, but there has been quite a bit of a sell-off for the German DAX market, which is the largest equity market within the European space. Gold definitely took quite a hammering this week. Everybody was extremely bullish on gold, myself included. Didn't take any trades on gold this week. The only trade that we did take was on pound dollar, which, as I've said, has paid off quite handsomely. But we had this, quite a horrible chop sell-off here for gold. This has been quite a horrible market to trade between sort of August last year and March this year. This looked like a bit of a pickup that was taking place, and with the news that just came out, quite a big sell-off for gold, and we'll have to wait and see what develops within this market over here. Then on your other major currency pairs, euro dollar down, euro yen also took quite a big knock. Pound dollar, this was the trade that we took, pound dollar down over 2% this week alone. Then on pound yen also down. The other local currency that I focus on is on the US dollar, South African rand. And how is Bitcoin doing? Well, it's still looking pretty weak-ish. No clear signs of a bullish reversal just yet. Pretty much, to be honest, since this big sell-off over here, we've just been consolidating. You can see that price has come in right now, and it's just taken out these highs right over here. And that is pretty much what's happened. We've taken out these highs over here, whipped it up, and pushed back down. And that's pretty much where we're at right now. So we'll have to wait and see what happens in the world of Bitcoin. But right now, dollar strength seems to be the news of the week, and all the other markets are taking quite a bit of a beating with that. Whether it holds up, whether the market has reacted a little too strongly to this news, whether the Federal Reserve follows through with what they've said they could potentially do and what they've hinted towards, we'll have to wait and see. To be honest, sometimes what the Fed says and what the Fed does can be two very different things. So we'll have to wait and see. And let's just talk a bit about pound dollar, because this was the trade that we actually caught this week over here. We got in on this candle close over there just before the London session kicked off on the 15th of June, which was around Tuesday. We put out a notification to our community saying that this is a market that we are getting into. We're going to be shorting the pound dollar. It initially sold off that day, then pushed up higher. You can see a price came and took out these highs, was rejected, and then we had the news event come out on Wednesday evening, and pound has just sold off ever since. And right now, if we just kind of work it out, as I've said, from my last calculation, I was sitting at around a 9% profit on this trade. So I risked 2% on this trade, and we're at 4.76%. So we're just over 9% profit on this trade right now, and looking pretty good. So I'm still holding on to this one. I do think that there's going to be a bit of a push up early next week because, as I've said, the dollar is into that key resistance level. And other than that, Bitcoin, as I've said, has had quite a big sell-off. You can see here that this market's also come into a key resistance level over here. And initially, there was quite a bit of news that came out this week. Once again, Elon Musk doing his thing, tweeting he's for Bitcoin, then he's not for Bitcoin, then it's too much energy. Then once the energy is green and clean, the Tesla will start accepting Bitcoin as payments again. So that had quite a big push up, for Bitcoin. And then Paul Tudor Jones came out also talking a little bit about Bitcoin, saying he wants more exposure, and that pushed the market up even higher. But once we took out these highs over here, you could see as price pushed up above these highs, couldn't be maintained and is sold off once again. So Bitcoin's still looking, quite weak in all honesty. I do think that price is going to come maybe back into these lows over here, retest the lows one more time. We might even come into the yearly open level of Bitcoin for 2021. We maybe take out these lows. Anybody that's long Bitcoin right now, I imagine that there is heck of a lot of liquidity sitting below these lows right here. And not just those lows, if we zoom out a little bit more, you'll see that there is quite a lot of consolidation over here. So if I just draw in maybe a little bit of a box here, I think that there is a massive liquidity pool of stop losses sitting under here for Bitcoin. I think everybody that got in early here on longs or shorts, any early shorters, or anybody that missed this trade all the way to the downside and now wanted to get in and thinking that there's another down leg, any early shorters now potentially have been taken out of the market on this wick up. And now what I do think is going to happen here is the market is gunning for anybody that's long Bitcoin now. Lots of stop losses sitting below here. And what I do think is that we could come in here, take out these levels. We could hit the 26 to 28K mark. Could be wrong. Love me, hate me. That's just my perception of potentially what might happen here. I currently don't have any trades open on Bitcoin right now. Nothing's really jumped out to me. In all honesty, market's still just consolidating and chopping. And I think only once we get a clean break above this level over here will we start to get bullish again. But it's going to be interesting to see what happens if price gets back towards these lows. I would love to see what price is going to do around this level. So let's wait and see. Right now, not much on the cards for us in the week ahead. To be honest, it's been a slow June. The first sort of week and a half of June didn't really have many trades. I think we took one or two trades, one on S&P 500, which we got stopped out. Then we had a 4% winner on the German DAX, which made up for that. And the whole of the previous week, we actually just sat on our hands, didn't get a single trade within the markets. And sometimes patience pays off. We waited, we sat on our hands, we waited for the right opportunity and the right setup. We got that on pound dollar this week, and we've milked that trade for 9% so far. So sometimes no trade is the best trade. Sometimes sitting on your hands can be the best thing you can do for you and your trading account. You don't always need to be in the market. And that is why when you are trading and you're speculating, you need to have a clear plan and a clear idea on what are you doing. What is your setup? What is the criteria that you're looking for? And if you are taking trades based on other people's social media feed, you are forever going to lose money. You need to really get something that you believe in, something that you're confident in, and you need to execute that system and strategy consistently, knowing that it is eventually over a large sample of trades going to yield a profit for you. So that's our weekly market update. That's our take on the markets right now. It seems like we're going to have to wait for a bit of a pullback, a little bit of, a breath of fresh air for the other major pairs after the big sell-off. We need that pullback. I'd like to see what's going to happen with the dollar index at its current resistance level. I want to see what's going to happen on Bitcoin and the indices. And I think the next few months are going to be quite interesting within the market, especially based on what inflation numbers come out and what the Federal Reserve is going to do with interest rates and bond buying and so forth. I'm still biased to the downside for the dollar. I still do think that there's dollar weakness based on just what the larger macro big picture timeframes are telling me on the dollar index. But you're going to have pullbacks in the dollar, especially after a big sell-off like that. Anybody that's tried to get in early could potentially now be stopped out on this big push up higher. And we now need to just wait and see what happens here on the dollar index, the indices, and within the cryptocurrency world. So that's it from me. All the best. Happy trading. If you've got any questions, queries, comments, or anything that you want to share, let me know. But that's it from me. Have a great week and chat to everybody really, really soon.